Here is day 13, and today we are going to be discussing on what to invest in when it comes to the stock market. Essentially, there are three ways that you can invest in the stock market. 1, through individual stocks. 2, through exchange traded funds. And 3, through mutual funds. So those are ways that you can get involved in this market. If you are somebody who is very high risk, who knows how to read financial statement, who can follow the news, follow CEO, do all of these things, you are not going to be bothered if your stock goes up 100% or go down 50%. Then investing in individual stocks might be for you, because this is you investing and betting on a particular company that company is going to do well. So if they go bust as well, you know that you can lose all your money. So individual stocks might be for you. If on the other hand, you are somebody who is not as savvy as the first person, you're somebody who wants low risk and doesn't want that kind of exposure, and you don't really have time, you want to invest passively, then you might look towards exchange traded funds and mutual funds. What is exchange traded funds? They are a basket of companies that are being managed passively, right? And they track an index. Popular example, you have the S&P 500. This is an exchange traded fund that contains the biggest 500 companies in the United States. So if you put your money into such, it is well diversified because it contains 500 companies. While some are going up, some will be going down. But you won't experience such volatility that you will see in individual stocks there. But it also has its own risk because it's solely based in the United States. But there are also other ETFs that are diversified across the world. In Nigeria as well, there are ETFs as well in Nigeria as well. Now, another way that you can be involved, if you don't want to even do anything and you want experts to manage your money for you, you can get involved through mutual fund. That's a pool of funds, and they invest them in diverse assets, right? So, but it will be managed by experts for you. So there are so many examples of mutual funds, and you can get them on all of these brokers. So those are ways that you can get involved. It all depends on your risk level, and it depends on your value as well, because the company you are buying needs to align with your value. So those are ways that you can pick what you want to invest in. But for somebody who is just starting, who is a complete beginner, the best thing I would say that person can explore is to explore starting from ETFs that are well diversified first before they start saying they want to be picking their own stock by themselves. It is just more safer than going into individual stocks once. So that's what I would say. Just note that whatever I say is not financial advice. This is just for educational purpose.